Well, let us welcome in Vikash Kumar Jain. He's India strategist and head of India research at CLSA. Is with us. Vikash, good to have you with us here. Thanks for joining in. What's the view now, Vikash? Markets have come up quite nicely from the lows. Trade headlines, etc. at the margin have also started to get a little better, but are we already kind of sort of pricing that in? What's your sense?
Hi, thanks for having me, Prashant. So, I think, firstly, this is a very interesting time in terms of lack of predictability, and it kind of is humbling when we try and predict markets, that the kind of uncertainties that we are dealing with. And whenever we think about it, my thought process has always been that we need to think of things as probabilities and think of how narratives will eventually play out. There are 2-3 possibilities as I see over the next 2-3 months as things could become a little bit clearer. Firstly, we've had, in terms of announcements, the headlines was the worst at the start of April. Things have looked a little less, little bit more de-escalatory from that point onwards. However, de-escalation itself may not be good enough. Finally, we need to find solutions in terms of what's happening around global trade. And that solution is what the market will seek. Market is currently assigning a higher probability of a solution getting reached. Solution should be read as quick trade deals with most of the trade partners, implying a relatively muted impact on global trade on a slightly medium-term perspective. However, the test of that will be over the next 5-6 weeks. See, so far, bar nobody other than the stock market participants or financial market participants in the first half of April has really felt the brunt of what could play out if there is a global trade war. That will start being felt, starting with people who are involved in global trade, like the port operators in the US and the ship operators. Then it would flow down into logistics operators, and then finally the consumers, because there's been a lot of stocking ahead of this. And then when that stock kind of goes away, all of this, in my opinion, is going to become more visible in June, in second half of June and early July. Incidentally, the 90-day deadline to kind of get on a trade deal also starts becoming much closer towards the end of June, because that's, I think, 9th of July or so. So I would say we're getting to a point where things can again start flaring up if solutions do not become visible. And, that's what we need to appreciate, that we are in a little bit of a calm period where markets can go up on the basis of expectations, but those expectations really need to play out.
Vikash, hi, morning. You know what? I don't envy the job that you folks have right now. There's so many moving parts and so much uncertainty in the world that to predict, where the market is heading is not easy. But we're going to ask you exactly that, right? So, like you described, there are two camps right now. The Nifty for the year is actually positive. It's up 3% in 2025, so great turnaround. One of the camps is saying that irrespective of what's happening with global trade, money will come into India because we'll be better than the rest. So the flows will keep the market elevated. There's a second camp which says earnings are a little muted, and let's not forget we have a big geopolitical situation here at home. I mean, even right now, the market, for instance, is volatility. It's turned very swiftly just this morning, and this is a reality of how we are where we are. Which of these two camps would you be in, and therefore, what is the call for the year?
Like I said, that I'll say all of this with all humility in terms of being accurate or not, but just to kind of assess each of these camps. And in the way I look at markets, I try and pay a lot of heed on where expectations are. And after this phenomenal rally that we've seen, and what a turnaround it has been, January, February, the first 2 months, India was the third worst performer amongst all the large markets in the world. And March, April, it ended up being the best performing market in the world. But all of that is, that 3% scoreboard that you said actually hides a lot of excitement in terms of volatility that we have gone through. But I think what we need to look at in terms of expectations is simply where we are right now. India is the most expensive market in the world, most expensive. And that's where what is the starting point for us. What we need to appreciate, and this is something which we bring out even in our note from today, in the first quarter, the only segment of the market which was seeing active increase, a clear increase in active weight for both FIIs and domestic mutual funds, was the mega cap stocks. What I define as mega cap is the top 10 large caps. Everything else, that means other large caps, mid caps, and small caps, is where they reduce their weight. Now, that just tells you one thing about this rally that we have seen. This rally in India has been driven by the need to find a place to hide. It is not a rally which is being driven by some kind of a beta where you are playing for the excitement of things continuing to get better from very good. That's not what is the foundation of this rally. And that is something that one should bear in mind. So the ones who are celebrating that India should be better off in a global trade war are correct, but that celebration should be muted, because if there is genuinely a proven global trade war, as one could fear, then in that setup, India will do well. But that definition of doing well does not mean that India will go up significantly. It simply means that India will fall lesser than others and India will outperform. But the other side of it is, suddenly, if you see the US market, they've, from that big collapse, I mean, we almost had a 15% rally. That's like what a rally it has been in the last 25 days or so. That is suddenly also raising hopes that there is going to be trade deals. Now, if trade deals really play out, which is the other side of the coin of, this being only a temporary trade war caused by humans so that someone could get a better deal, if that is the angle, then suddenly the next leg up in the market will come from people who are part of global trade or countries who benefit from global trade coming back on the table. So I think that's a nuance that one needs to kind of think through. It's very difficult to imagine a situation where India goes up more than, globally things doing right. So that's a difficult situation.
There's a lot of caution. We're reading between the lines and you're very cautious. So what, best case, flat from here for the rest of the year? I mean, 5% up. Can you put some sort of a numerical range to this?
Oh, I think, let's talk about the good case. The silver lining for us is, yields have gone down significantly. And if I were to compare equity and bond valuations, they are not as inflated as typical equity in itself. So, I mean, equity to bond valuation is at a point where you can say they have been around the median levels for us in the last 13, 14, 15 years. So that's one silver lining for us. So I think for the market to even give a little bit of more positive return, the one thing that needs to hold is bonds. Our bond yields should not really rise from here. And that is something that is not an easy ask. Although, for someone who's looking at things in a very simplistic way, you can say that, yes, RBI is going to cut rate more. So ideally, that should be easy to hold. But if you were to compare our bond yields versus all of the global bond markets, it looks pretty expensive.
All right, Vikash, before we let you go, I think that FMCG basket was your anti-consensus call after being underweight. I think you turned relatively positive. And staples, I think, was your top bet out there. Does that hold? Do you see that being the relative outperformer for this year?
Yeah, so I mean, as you would have guessed, that I am not really in this to play a lot of big upsides. And in that setup, staples continues to be our big overweight in the India focus portfolio that we had. We made a few changes a couple of weeks back, but we've kept staples as the big overweight. So because we are just trying to find that defensive, which can give us a little bit of return, because we believe that should be that should allow us to outperform the markets.
All right. Vikash, I mean, no, absolutely. And I think some of those points are very, very well taken. By the way, Vikash, on IT services, we're speaking with the management of Coforge up next, which of course has been the outlier in the IT. Persistent and Coforge, of course, have been doing relatively much better than the rest of the IT services space. What's the big view there? I mean, do you have a view? I know, it's well established. There's a fair bit of uncertainty, etc. But what we are seeing is not just in terms of the trade uncertainty, but technological changes, etc. Is it a bit of a big issue?
So, they are, I would say, let me just kind of IT services, the big view is since we are in a headline-driven market, for us in India, these are the stocks which will be the headline-driven stocks. Because if something goes wrong with global growth and with US growth, then this is where people will actually be finding their ways to exit or to kind of go short of the ones who can. So that top-down setup isn't great. However, over the last 5-7 years, these companies have come up with very clear cash return policies in terms of either dividends or buybacks, etc. And on that basis, some of them are now coming to levels which one could start seeing people who are more bottom up in their thought process could start seeing some kind of comfort coming in, because after a long time these are coming back to long-term average, near long-term average valuations. Some of them, some of the large caps one. So without going stock specific, it's a little bit of a fight between the bottom up and the top down. I would say the point where the top down news flow starts waning, or the power of that starts waning, is when one should focus on the bottom up more. That is my personal opinion.
Okay, all right, Vikash, great chat as always. Thank you very much. Take all your points on board. We look forward to the next one again soon. Have a good day.